Morning, everybody. Chrissy here, and today's topic for Financial Friday is receipt management. And I know it's one of those things that you probably have a bunch of receipts either piled in your office or at the bottom of your purse or even in the proverbial shoebox sitting in the corner of your closet. But what we need to remember that having those receipts is actually a crucial part of your business operations, and managing that that documentation is just another piece of running a successful business. And we're going to talk about a few key pieces of what makes a receipt compliant in the eyes of the IRS, and some other things that help you do better in keeping these receipts going month to month instead of a big old pile of them to take care of at the end of the year. So let's go ahead and get started. The first thing I want to do is, I love this quote. I have it on my fridge and on my desk even, is, if you don't have time to do it right, when will you have time to do it over? And I think that's such a great way to think about especially this part of business, because it's so easy to, like I said, toss the receipt in your bag or put it in the center console of your car. Who hasn't done that before with one of them? And you set it there, and it's future use problem, and you'll take care of last month's receipts next week, and then you'll take care of last quarter's receipts, and it eventually just snowballs into something where you can't remember what the transaction was for, who was with you, what it was, how it was split, which part of it was personal, all of those things. And it becomes a major headache and can honestly cost you if you lose those receipts or don't have the right substantiations if you are ever audited. So keep this in mind when you have the drive to go faster than you can do things right. Think back to this, and future you has to solve it for you later. Okay. So there are two types of receipts, and one of them is your income receipts. These are your commission statements. If you are paid a W 2 wage, this is your pay stub. These are your income receipts. Now, as an agent, you get a 1099 at the end of the year, and your commission statements should add up to that amount on the 1099. So there's softwares and all of those things that go along the way, that plug those numbers in to spit out your 1099. But ultimately, that is a person at the end that is taking care of all those pieces. So you should verify your 1099 total income, taxable income, against all of your other pieces to make sure that it was done correctly. If you got that and then did your taxes against it, and then a month later or 2 months later, you get a corrected 1099, you've got all sorts of stuff to start going through to change and redo your taxes. So start keeping track of these. Keep an eye on them. Those NOTC emails, that is this receipt. You can always go into eXp Enterprise and print out each one of those individually. But if it's already coming to you, save it in a folder as a PDF outside of your team email inbox, and save it there, and then you have it. That is the substantiation that you need for this side. Okay, this is the proof of where your money is coming from, so it would be recorded as income. The other side of receipts is expense receipts. So these are count as the documentary evidence in the eyes of the IRS, but there are going to be some pieces, and not all receipts are created equal. And I'm going to show you what those details are that you need to make sure that yours are covering the four things that they need to do to be considered compliant. So a qualifying compliant receipt has the name of the vendor, has the amount, the date the transaction happened, and the nature of the expense. And that's like, well, duh, that's a receipt. Okay, that's whatever. But I can't tell you how many times I get receipts as a bookkeeper that don't meet all of this criteria, and I have to go back and either ask other questions or find another source of proof for it. So this is one that covers all, that checks all the boxes. Okay. We know that it's from Amazon. It says it's sold by Amazon.com services. Okay. We have the date, Monday, November 5th, 2018. We have the amount after tax, the total order total down at the bottom, and then the purpose. You can see that it's a book. You can see that it's a book about employees running in a certain business, like model. Okay, EOS is great. We can talk about that later. But this one covers all those boxes. This is ultimately a screenshot of that, but it does what it's supposed to. So here's another one. This is one that I see a lot that doesn't have all of the pieces that it needs. It has the place, it's Fresco's Cafe. Okay, we have the date on there, the amount, which includes the tip. Okay, this is a piece that people forget a lot. I'll get the itemized one that the server gives you that tells you what the total is. That's the one that has a dollar amount of $48.25 in this case. But I don't often see this side for new people starting out with doing this kind of receipt management, where it has the tip on there and then the new total. I don't have to see the signature. See how that's cut off for that piece on there? You can protect your signature 100%. But then the purpose, why is this a business meal? You have the names of the employees that you met with, and it says team meeting. Totally generic description, right? It's a team meeting, or lunch with client. You don't have to go into detail about we were looking at 8 properties and talking about how we're going to stage, or you don't have to go into a paragraph summary on the back of it. Names and just business purpose. That will cover it and meet those 4 criteria for you. So here's one that doesn't. All right. We have the place. It says Amazon.com. We have the date. We have the amount. But can you tell me what this receipt is actually for? It's Amazon.com. It could be a million different things. And because you're saying it was a business expense, isn't enough. You don't have the purpose. You aren't actually showing what it is. It could be office supplies. Okay. It could be shampoo and conditioner. It could be swim trunks. It could be a number of things. The mantra of the IRS is trust but verify. This doesn't verify. Okay? You have to prove it. And that is what that purpose is. Here's another one that doesn't check all the boxes. Okay? You go through, you have something, I'm going to save the receipt. I'm going to snap a photo of it. You snap the photo. Looks good, you crumple it up and toss it away. But ultimately, as your bookkeeper, this doesn't have all of the pieces I need to check the boxes. It doesn't show me where it's to. Okay, that part got cut off. Okay, it has the date and it has the amount, which I appreciate getting the tip part in there, but also it doesn't have the purpose. So who was there and what was the reason it's a business meal? Okay, those are the details that are going to get that across the finish line to be an undisputable, compliant substantiation. Okay, so there are some softwares out there that can help. Even just taking that photo in your phone, saving it to a folder, okay, and having all of your receipts in there definitely works. But if you had to go back through and find specific ones, you're going to be scrolling through for a long time. Okay, if your phone crashes, you then don't have it anymore. Lose your phone, get it. So all of those things, right? So there's other things that you can do to make sure that you're not only getting it taken care of, but then it's stored in a way that you're never going to lose it. So here are 4 from the accounting side that are undeniably used all the time. So you have HubDoc, Expensify, Shoebox, and then QuickBooks Online actually lets you take photos, or attach PDFs to the transactions within the software. And then if you needed to pull the report, everything's in there right away. Now, is it hard to get things in every time things get missed, don't get uploaded? Sure. All those other ones let you kind of dump it into folders that categorize it by date, month, vendor, all of those pieces. So it's easy to obtain and grab later on. These might be more than you might need. If you need something that's free and simple, there's these ones as well. Dropbox, Google Drive, Rewind for QuickBooks works. It is a bit more technical, so honestly, the first two are ultimately your better options. Go by a year, put in then the vendor name, drop everything for that vendor that you get in there, and then when the new year starts, anything that is in that new year, you start new folders. That easy, okay? So, what about the last receipts? I'm not here to just, make you lose any sleep about previous ones that you don't have anymore, okay? Ultimately, every day you're trying to just improve, doing things a little bit better. These are key pieces that you can do better, and that's it. But what if you have lost them? What could the ramifications be? Worst case scenarios, right? So let's look at it. Two factors that go into these. One of them is you just didn't know, right? You didn't know what you didn't know, and you didn't do it right, and now you have things tossed out because you don't have the right receipts. You can't find them. You don't have a way to substantiate it. This is what the IRS would call negligence on an audit. With that description, you're going to get a 20% penalty plus interest on it. Okay, so just saying like, oh, I didn't know that doesn't get you a freebie. It ultimately can cost you this much more on top of it. Okay, the other side of it is deliberately putting something that should not have been a business expense in there. And if they consider it as deliberate, then it's a 75% penalty plus interest. So not knowing and making improvements to get better versus deliberately putting things in there, that's where you're going to see between that 20% and that 75%. Okay, so here's an example. $2,000. You couldn't find the receipt. You didn't remember what it's for. You have no idea anymore. If it's considered negligent, then that's an added on $400 plus interest. Okay? But if they say that it's deliberate, you tried to say something was a business deduction that shouldn't have been, then they're adding on $1,500 to that $2,000 plus interest. So having a blind eye to what should be in there and what shouldn't, going by what the latest Instagram guy or TikToker says about this is how you can write these off and this is what I did. Trust a tax professional and make sure that they're CPAs or enrolled agents, they have credentials, okay, that they've passed different things to let them know what is going to work and what isn't. So trust those. Don't be like some guy on the corner told me this new way that they're getting certain things off. It's great, but there's also probably criteria that has to meet it. And a lot of times ahead of time, you can ask them, how can this be a business? How can I make this legitimate? And they'll give you the criteria to make it that way. But if it's after the fact, then it gets a lot harder. Then you've got a lot more hoops to jump through, and this, talk to them and they'll help you out. Okay. So if you have any questions, you have certain questions about different pieces, something spoke to you, you want to know about different softwares, how do I set this up? Feel free to reach out, give me a call, send me a Slack, shoot me an email, any of those. Happy to go over any of those specific questions with you anytime. And as always, thank you for joining me for another Financial Friday. See you again in a couple of weeks. Take care, everybody. Bye.